Good morning, ladies and gentlemen. On behalf of the Hong Kong Monetary Authority, I am very pleased to welcome you all to join today's event, CEO Talk, Opportunities for Green Bank Transformation, which is the first roundtable of the Alliance for Green Commercial Banks. Last November, the HKMA and the IFC jointly launched the Alliance to help banks develop the solutions necessary to address climate change across emerging markets. As the founding member and the first regional anchor for the Asia chapter of the Alliance for Green Commercial Banks, the HKMA will serve as the hub for green finance among commercial banks in Asia. Today, we're delighted to have Stephanie von Friedeburg, Senior Vice President of the International Finance Corporation, to deliver opening remarks, followed by a keynote speech by Dr. Ma Jun, Chairman of the Green Finance Committee of China Society for Finance and Banking. After that, there will be a roundtable discussion moderated by Eddie Yu, Chief Executive of the HKMA. Participants are welcome to pose questions for the floor Q&A session. To kick off the roundtable, may I invite Stephanie to deliver the opening remarks. Stephanie, please.
Good morning. My name is Stephanie von Friedeburg, and I am the Senior Vice President for Operations at the International Finance Corporation, an arm of the World Bank Group. We are the largest global development institution focused on the private sector in emerging markets. We work in more than 100 countries using our capital, our expertise, and our influence to create markets and opportunities. In fiscal year 2020, we invested $22 billion in private companies and financial institutions in developing countries, leveraging the power of the private sector to end extreme poverty and boost shared prosperity. I am delighted to open this meeting this morning, a roundtable on the topic of green finance and green banking, hosted by IFC's Alliance for Green Commercial Banks in partnership with the Hong Kong Monetary Authority, HKMA. IFC and HKMA launched the Alliance in Asia in November of 2020 to bring together financial institutions, research institutions, and innovative technology providers. This aim is to accelerate adoption of green banking practices and increase financing available for climate investments. Allow me to reflect on the timeliness and importance of this topic before speaking about IFC's experience and objectives in green finance. Last year, while the world's attention was captured by the COVID-19 pandemic, the UN published its report on the state of the global climate for 2020. Its findings are harrowing. Data shows an overall acceleration in global climate change over the past decade. This includes rapidly melting ice sheets, record levels of ocean heat and acidification, and a litany of so-called high-impact events. Such events are droughts and extreme heat, wildfires and floods, hurricanes and tropical storms. In one way or another, these affect every country in the world. The past 6 years are estimated to have been the 6th warmest on record. The report is a reminder that globally we have not done enough to reduce carbon emissions and superpollutants, limit the increase in global temperatures, and avoid irreversible, catastrophic climate change. While dire in its conclusions, the report holds a kernel of hope. The authors note that smart investment, specifically in green and resilient infrastructure, in tandem with rising carbon prices and other supportive policies, we can reduce emissions sufficiently to keep global warming below 1.5 degrees Celsius and put the global economy on a sustainable growth path. The report concludes that we can afford the costs of the transition to a low-carbon economy, but we need to invest urgently and at scale. Investing at scale in climate solutions is a strategic priority for the World Bank Group. It is the largest multilateral provider of climate finance for developing countries, delivering over $83 billion in climate finance over the past 5 years. At IFC, since 2005, we have provided more than $28 billion in long-term finance for climate-related projects in emerging markets and mobilized $22.3 billion from other investors. We have mainstreamed investing in clean energy, sustainable cities, climate-smart agriculture, green buildings, and green finance. And we collaborate with governments, the private sector, financial institutions, and other development banks to increase climate-related investments. The World Bank Group recently announced an increase in our climate investments to 35% of total long-term finance between 2021 and 2025. We are also aligning 85% of our new direct investments with Paris alignment starting in July of 2023 and 100% of new direct investments starting July 2025. As part of this process, we are jointly designing a methodology with other multilateral development banks to assess investments in non-direct lending operations, including via financial institutions and funds, and we will be making commitments around this once this work is completed. Many central banks and regulators are also taking steps to ensure that financial flows are consistent with a pathway towards low greenhouse gas emissions and climate-resilient development. Some have begun to assess climate risk as a financial risk in stress tests. Many are encouraging or mandating climate-related financial disclosures and setting sustainability criteria standards for green lending by commercial banks. Some regulators are taking this one step further and are also helping to push commercial banks to recognize the financial risk that they face if they do not take into account climate considerations. IFC has found that there are some $29 trillion in green investment opportunities in sectors such as clean energy, clean buildings, and climate-smart agribusiness in emerging markets, which will require financing by 2030. By adopting green practices, banks can differentiate themselves and increase market share by attracting international capital and customers seeking sustainable financing options. This market represents a growth opportunity too big to miss. To finance the greening of the economy, financial institutions must grow the share of climate-friendly projects in their portfolios from an average of 7% in 2016 to 30% by 2030, or an increase from approximately $1.5 trillion to $13.4 trillion. That growth opportunity is even greater now as countries shift from the short-term pandemic relief towards investing in a post-COVID green economic recovery. To seize this opportunity, however, banks need knowledge and capacity. This applies to greening their businesses and their operations and assessing, managing, and disclosing ESG risks. To help banks manage this transition, IFC launched the Alliance for Green Commercial Banks with HKMA as the founding member of the Asia chapter and its regional anchor. The Alliance was conceived as a one-stop shop and peer-to-peer learning platform for commercial banks and other financial institutions. Through the Alliance, members will acquire knowledge and tools to develop green finance roadmaps and transform into credible green banks. Our hope is that the Alliance members will be leaders in developing and financing climate-smart projects and businesses to enable the transition to a low-carbon global economy. Today's expert panel is the first in a series of bi-monthly events presented by the Alliance for Green Commercial Banks as part of its knowledge sharing and capacity building efforts. The panel will examine the experiences of HSBC and Bank of China Hong Kong, two leading financial institutions which have made a commitment to sustainability in their operations and business practices. Their insights and innovations can be a source of learning for all banks on a similar path. I hope that many of you watching today will be encouraged to learn more about how IFC and HKMA are partnering through the Alliance for Green Commercial Banks to support financial institutions in Asia on their journey to become green banks. Thank you very much and enjoy the presentation.
Thank you, Stephanie. Now may I invite Dr. Ma Jun to deliver the keynote speech. Dr. Ma, please.
Thank you very much, Susanna. Can you hear me okay? Great. Well, first of all, let me thank HKMA and IFC for inviting me to join this roundtable on green banking. it's my great pleasure to be part of the discussion. In the next 10 minutes or so, I'd like to touch upon two areas. One is the latest trends of green finance development in China, especially at the policy level. And secondly, a few international initiatives which China and myself have been deeply involved, including G20, NGFS, IPFS, and so on. Now, starting with China, everybody knows that our president declared the carbon neutrality goal in September last year. And since then, virtually all ministry, all regional governments, all major companies, all major financial institutions have begun to develop their roadmap for implementing carbon neutrality. So lots of discussions on how finance should support this decarbonization trend. And within the financial sector, we believe a few things need to be done to significantly enhance the level of green finance to support the mobilization of financing for carbon neutrality and to prevent the risks associated with the decarbonization process. Specifically, 4 areas that we need to do our work. One is to revise taxonomies. As you know, China has developed 3 sets of taxonomies already in the past 6-7 years, including taxonomy for green lending, for green bonds, for green projects. And a few days ago, the PBOC published the revised version of the green bond taxonomy, which removed clean coal technology and a couple of other high carbon activities. And I think in other taxonomies, such adjustments will be needed as well in order to make sure that the new taxonomies are in line with the carbon neutrality goal. The second area of improvement is to enhance disclosure, especially related to carbon. Before, there were disclosure requirements for green bond issuers, for banking, and for corporates, but very little emphasis on carbon-related information. Going forward, I think carbon-related information will become mandatory disclosure requirement for major companies and gradually covering smaller companies, and will become mandatory requirement from financial regulators for financial institutions to disclose. Specifically, I expect the banks to be required to report carbon footprint of their loans, and other financial institutions will be required to report carbon footprint of their investments. Only if such information is reported, the regulator will know how much you have moved towards carbon neutrality, and yourself will know how long the journey would be for you to achieve carbon neutrality. And the third aspect of revision in the green financial system is introducing more incentives or stronger incentives to cover low carbon activities. A couple of ideas were discussed. One is to expand the re-lending facility to support the low carbon activities. My proposal early this year is that the central bank should introduce a green re-lending facility only for low carbon activities in the amount of a few hundred billion RMB per year. And secondly, the central bank and other authorities will need to consider reducing risk weights for green and increasing risk weights for brown assets, so that to reduce the funding cost for green lending and increase funding costs for brown lending. And also, regulators need to consider the green collateral requirement, namely that if banks have green assets which are qualified, they will be able to borrow from the central bank for cheap financing against such collaterals. And also, environmental and climate risk analysis will become a more popular practice and eventually become a requirement from regulator. That's been done in a couple of banks, including as early as in 2015, ICBC started this environmental risk analysis. Now, at least 4 banks have conducted internal analysis on environmental climate stress testing and scenario analysis, but that's not enough. We need to make sure that all financial institutions are able to do that and to gauge the exposure of the assets to environmental and climate sensitive areas, and also estimating the future non-performing loans, as well as the impact on asset valuation due to climate related factors. Now, let me switch on to a couple of international initiatives which are quite relevant to both Chinese banking system and also, I'm sure, to the banks in the region. One is the G20 Initiative, which you probably know that in 2016, when China was the presidency, G20 initiated its Green Finance Study Group. I had the honor to co-chair the study group between 2016 and 2018. And that group in early years initiated this global consensus on scale-up green finance. And between 2019 and 2020, this study group did not continue. But this year, under the Italian presidency of G20, it was reestablished. And now it's renamed to G20 Sustainable Finance Working Group. Once again, I have the honor to co-chair the working group together with my counterpart from the US. And this year, the G20 working group will look into developing a G20 roadmap for sustainable finance, which will guide the G20 work for the coming few years. And also we'll work on issues such as sustainability reporting, on taxonomy, and on role of MDB in supporting the Paris Agreement. The second initiative is NGFS, which I guess all of you know. It was launched in 2017 by 8 country central banks, including the PBOC, and now it has expanded to more than 89 members, including all major economies, such as US, China, and all European countries, and the UK, and many, many others. And now it's become truly a platform for central banks and supervisors to disclose, to discuss options on how monetary policy and regulatory policies will be able to enhance the green finance activities and guard against climate-related risks. And recently, 2 projects were done under my leadership. One is the environmental risk analysis publication. We actually published 2 documents in September last year. One is called Overview of Environmental Risk Analysis, which represents the official view of the NGFS, essentially suggesting all central bank and supervisors should promote such methodologies among their banks, asset managers, insurance companies. And second document is called ERA Methodology Case Studies, which consolidated more than 30 methodologies, including models and other tools from many organizations that can be used by banks, asset managers, insurance companies on quantifying the environmental climate risks arising from the exposure. And I encourage many of you, if you have not looked into these methodologies, to begin study these materials as a reference. Another initiative which I recently co-chaired together with Nick Robin from Inspire under the NGFS brand is a biodiversity study looking into the relationship between finance and biodiversity, and especially on the relationship between loss of biodiversity and the impact on financial stability. And we're hoping that this study will yield some recommendations for financial regulators on how to enhance the disclosure related to financial operations impact on biodiversity and the potential impact of lost biodiversity on the finance sector itself. Just one word on IPFS, it's International Platform for Sustainable Finance, which was launched about 2 years ago between EU, China, and some other countries. And under this platform, a working group was set up last year to look at how to harmonize taxonomies across different markets. And China and the EU were co-chairing this working group. And this working group is aiming to produce a common ground taxonomy based on the Chinese green bond taxonomy and the European sustainable finance taxonomy, which was just released a few days ago. And our goal is to have this common taxonomy to be used on a voluntary basis by issuers and investors. For example, if a Chinese issuer wants to issue green bond in Europe, they'll be able to use this taxonomy. And if a European issuer wants to issue green bond in China, for example, in the panda green bond market, then they can also use this taxonomy. Of course, other markets and issuers from other jurisdictions can also use this as their taxonomy or as a reference for producing their taxonomies. By doing so, we're hoping that the working group will be able to contribute to some ideas and making some good cases and references for future harmonization of taxonomy across different markets. So I think I'm using up my time, and let me thank the host, HKMA and IFC once again for inviting me to join this roundtable, and I wish the event a great success. Thank you.
Good morning, good evening, everyone. My name is Eddie Yu, the Chief Executive of the HKMA. First of all, I would like to thank Ma Jun for the keynote speech. And also earlier on, I would like to thank Stephanie for the opening remarks. They have both provided very useful insights about climate change, the role of banks in greening our system. And I think their comments actually very nicely set the scene for our roundtable discussion that we are now coming in. Like Stephanie and Ma Jun said, I think climate risk or climate change is now quite widely regarded as a major risk to the well-being of business, financial institutions, and more generally, humankind. In order to tackle this very important challenge, we need a lot of investments to finance the transition to a low-carbon economy. For example, the IPCC, the Intergovernmental Panel on Climate Change, has estimated that annually we need an average $830 billion of additional investments from now to 2050 in order to bring global warming below the 1.5 degrees. So you can see that the banking sector, being the major financial intermediation channel to get the funds into sustainable investments, will be a crucial sector in achieving these very ambitious global climate goals. And banks clearly have an impact on the way that climate risk is managed or reduced, and also they can influence other sectors in different ways. For example, in terms of leading their lending or investment practices, or even just leading innovations in their own organizations. And so as part of the HKMA effort to promote green finance, we jointly launched the Alliance for Green Commercial Banks with the IFC in November last year. The aim is to support financial institutions on their green transition, and also to help banks develop the solutions that's needed for their green transformation. And today's event is the first roundtable organized by the Alliance. And in this discussion, we will hear from a few prominent panelists about how green banks can unlock the ESG opportunities, which can improve their resilience against risk and also address the more imminent climate change challenges at the same time. Today, we are very lucky to have three very prominent speakers to talk to us. May I first introduce our panelists, and they are Peter Wong, the Deputy Chairman and Chief Executive of Hsbc Asia Pacific, Sun Yu, the Vice Chairman and also the Chief Executive of Bank of China, Hong Kong. And then we have Alfonso Garcia Mora, who's the Vice President, Asia Pacific of the International Finance Corporation. I would like to first welcome all our three panelists to this roundtable. And let me start with Peter. We all know that HSBC is a very prominent global bank, which has also got very extensive footprint in Asia. Can you tell us a little about your green transformation journey of HSBC in Asia? What are the commonalities and also the differences that have been observed in different jurisdictions? And what are the lessons learned in your own journey in Asia? Peter, please.
Thank you, Eddie. Stephanie, Dr. Ma, very honored to be here. Well, no one doubts the gravity of the challenge that we face regarding the degradation of the environment. Asia is particularly vulnerable to climate change. We have floods in Indonesia, Australia, we have drought in Taiwan, and the IMF forecasts that if the current situation persists, that the crop yields, for example, in rice in countries like Vietnam, Thailand, is going to drop by 50%. And also different countries are moving at different speeds. South Korea, they want to have carbon neutral by 2050. China, 2060. And also India, they want to reduce the emissions to 2005 level by 2030. But there are still others who think that there's a trade-off between sustainability and also growth. This is a mistake. Unsustainable growth is a contradiction in terms. Now, we need sovereign leadership, which means different things to different jurisdictions. Well, we need governments to issue green bonds to establish the green capital market. We need carbon caps. We need trade-offs in carbon schemes. We need potential tax and regulatory incentives. For example, we have lower RWA for green bonds, for green loans. For commercial bank, HSBC would want to be a global and regional conduit to channel the investment to help the transition to green. To succeed, we need standards. Whether a project is green, whether a project is carbon neutral, carbon positive, carbon negative, we need some standards. And also there's some uniformity that the investors would also like to have so that they can have the bonds being traded in different markets. And finally, it is great that now that Asia's voice is being heard, and we are working closely with HKMA, and HKMA is working closely with the Hong Kong Green Alliance to make sure, and also working with Dr. Ma Jun to make sure that our voice are being heard. And this is very important to Asia. Thank you.
Thank you very much, Peter. After hearing from HSBC, let's hear from another prominent bank in Asia, and that is Bank of China Hong Kong, which also have extensive presence around Asia. Now, Sun Yu, can you share with us a bit about BOCHK's sustainability practices, your plans, and how did BOCHK start the journey in getting green? Sun Yu, please.
Thank you, Eddie. It's my pleasure to join today's event. In the past few years, we have all witnessed both the governments and the regulators are integrating sustainability into the national strategies and regulatory requirements. So nowadays, I think no bank or company can ever underestimate the importance of green finance or sustainability. For Bank of China, we aim to connect the world for the common good, which is our strategy. I think sustainability is a core concept underpinning the bank's future strategic development. How to turn this great concept into reality, I think the key is the execution. Without proper and dedicated execution, green finance can easily turn to an empty slogan. So for Bank of China, we are taking actions in three respects. First is to build up the right governance to make sure the daily working practices are being monitored by both the board and the management. In year 2019, the Sustainable Committee at the board level and the Sustainability Executive Committee at the management level were established. And secondly, I think the bank has attached great importance to the green finance capacity. Because frankly speaking, the issue of green finance is not only an issue of attitude, but also an issue of capability or capacity. To build up the capacity is extremely important. To build up the infrastructure is very important. So, for example, for Bank of China Hong Kong, we incorporate ESG considerations into daily risk management, into business operations, into decision-making process. And we cultivate green finance talents, embrace new technologies, and more importantly, continue to enrich of climate-related product lines. Last year, Bank of China Hong Kong launched the first third-party verified green deposit product in Hong Kong. Thirdly, I think in the process of turning the bank into green, we are not only turning ourselves green, but also help our clients to turn green as well. Bank of China has been acting as a connector, bridging of clients with greening opportunities. We help our clients who embrace green transformation. We help the global investors who look for positive impact project. I think it is very important for us to put ourselves into the shoes of clients and working together with them to develop suitable green finance solutions. Thank you.
Thank you, Sun Yu. I fully agree that execution is important, building capacity is important, and actually building capacity and promoting green investment is where this alliance is coming from. So let me now turn to Alfonso, the Vice President of the IFC. Alfonso, after hearing from the banks, can you tell us from a whole market perspective, why do we want to go for green transformation? What are the benefits, whether it's environmental or financial or other benefits? Can you tell us, please, Alfonso?
Sure, thank you. Thank you very much, Eddie, and it's a big pleasure to be in this panel with these distinguished speakers. So your question is a very interesting question, and I think it is good to actually take one step back and reflect on what are the benefits, both from an environmental but also from a financial perspective of this green transformation. I think that, let me start by saying that green transformation, as my colleagues have said before, is imperative and is urgent. I think that we all know that the world is at risk of irreversible and disastrous consequences if we don't really act now. According to the United Nations, as we heard before, without climate-informed development, climate change could erode development gains and force as much as 100 million people into extreme poverty in 2030. In fact, a 2018 intergovernmental panel on climate change suggested that we have less than a decade to stop runaway climate change. COVID-19 may result in a 6% drop in GHG emissions for 2020. However, this drop is temporary, as we know, and is still short of the 7.6 annual reduction required to limit global warming to 1.5%. And Asia stands out, as we know, as being more exposed to physical climate risk than any other parts of the world, in the absence of adaptation and mitigation. McKinsey estimated that the Asian GDP that is at risk from the warming accounts for more than 2/3 of the total annual global GDP impacted. So the green transition in Asia is imperative to solve this problem globally. And this gives us a sense of the environmental challenge and therefore the potential benefits. But this urgent need for green transformation brings very good opportunities and very important opportunities for both corporates and financiers. For corporates, because green transformation introduces alternative funding channels, such as green bonds that were mentioned before, that allows them to tap the $100 trillion pool of existing long-term private capital and reducing the resilience of corporates on the traditional sources of funding, such as bank loans. So the creation of this asset class is very important, can have a huge impact in the markets and not only on the financial sector, but also on the private sector, on how corporates, but also public sector can get finance in markets. For financiers, the impact investment is a growing business with huge potential, as we are seeing in many different regions. Limiting global warming to 1.5 degrees needs massive flows of capital towards sustainable investment. And as Stephanie mentioned before in her opening, our research estimates that cities in emerging markets alone have the potential to attract around $29 trillion in climate-related investments by 2030. And the Asia-Pacific region has the highest climate-smart investment potential of any region in the world. It is estimated that Asian banks already have a collective green portfolio of over $200 billion, with the potential to reduce up to 200 million tons of GHG emissions annually. So I think that going forward, according to our analysis on major emerging markets in Asia, focusing on green investment in selected sectors between 2020 and 2030 could generate as much as $15 trillion in investment opportunities, reducing GHG emissions by 2 billion tons. And though this could be seen as anecdotal data, more and more evidence show also that green transformation pays off in terms of financial returns. Stocks with higher ESG ratings outperformed those with weaker ESG ratings in the first 9 months of 2020. Stocks with ESG rating of A outperformed the MSCI AC World Index, and groups with higher ESG ratings fell less as the market collapsed. So I think that there are very good reasons to think that the benefits are not only for the environmental perspective, for the economic growth, for an inclusive growth, but also from a financial perspective. Thank you, Eddie.
Thank you, Alfonso. I certainly agree with you that doing green transformation will have wider impact on the whole market, including business and other corporates. In the first round of our discussion, we've talked about the green journeys of different banks. We've talked about how you do it in your own areas. But let's get to the opportunities that green transformation and ESG might create for the green commercial banks. Now, let me get to Sun Yu first. From the perspective of BOCHK, what opportunities do you see in green and sustainable finance in Asia? How can banks and other stakeholders work together to promote the development of green finance? You earlier talked about creating solutions together with the clients. Can you tell us a bit more about the opportunity side? Sun Yu, please.
Thank you. So following the steps of Europe, in the past few years, the green and sustainable finance in Asia has taken off. I think showing a trend of catching up from the behind. For example, according to the forecast made by OECD, the funding needs for the green infrastructure along the Belt and Road, mainly in Asia, will reach $1.5 trillion per year. China has adopted a national strategy to promote green finance and already announced the 30-60 goal, which is to peak carbon emissions by year 2030 and to achieve carbon neutral by year 2060. Last week in Boao Forum, the governor of People's Bank of China, Mr. Yi, gave a very encouraging and informative speech and declared the central bank will double down on green finance and take a slew of measures to further support the green finance. I think benefiting from the top-down design, commitment, and the guidance, China's green market has grown rapidly in the past few years, as Dr. Ma mentioned just now. By the end of last year, the green loans and the green bonds totaled $1.8 trillion and $125 billion respectively, ranking as the world's largest and the second largest. And it is estimated by year 2060, the climate-related investment will amount to 139 trillion RMB. That's a lot of money. Hong Kong stands at the heart of the China's dual circulation strategy and has played a role as a super connector between mainland China and the global markets. Hong Kong's ambition to become the regional green finance hub and also the pledge to reach or achieve carbon neutral by year 2050, plus upcoming the new Hong Kong Climate Action Plan, I think it will definitely provide guidance to the green transformation for the local economy. All these are very encouraging news. I think the banking industry are crucial for the green transformation. Banks are natural counterparties or partners to help the clients to achieve low carbon and the green transformation. But I believe, for the banks to better participate in the market, we need to make progress in 3 areas. First is discipline. I think discipline is the key of the financial institutions. And the preconditions of discipline actually is a set of uniform standards or rules to make sure we can increase the market transparency. Second is incentive. Ma Jun mentioned this as well. I think a systematic green finance incentive is in need to encourage market participants. You can imagine that both the investors and the consumers, especially those from the emerging market or less developed countries, they are highly price sensitive. In such cases, the incentives such as tax concessions or funding support are very important to encourage them to participate in the green finance market. Thirdly is the ecosystem. I think the ecosystem is the key to enhance the green finance capacity for the whole industry. Governments, regulators, financial institutions, green finance institutions, academic institutions, plus the industry and the corporate fields, we need to work together to create the green finance ecosystem. And only by having this kind of ecosystem, we can deal with issues like the lacking in green finance talents, lacking in green finance data. So thank you.
Thank you, Sun Yu. I think you're exactly right in talking about standards, incentive, and ecosystem. And Hong Kong has actually been developing the ecosystem here to be a green finance hub.
Exactly.
So let me now turn to Peter and ask, Hsbc has extensive operations rooted in Hong Kong. What do you think the Hong Kong platform can offer in order to promote green finance across Asia?
Well, Asia is going to need trillions of dollars to help this transition to green. And Hong Kong has the expertise and the capital markets to be the catalyst as well as a conduit to get international investment into the region. The supply of Asia US denominated green bonds grew from $2 billion in 2015 to $17.5 billion in 2019. And this is a huge opportunity to Hong Kong. The alliance between HKMA and the IFC was groundbreaking because this is the first time a World Bank group had come together with a central bank to promote sustainability. And the government in Hong Kong has already issued quite a number of green bonds, and this will help to create the green capital markets. And also the Hong Kong Stock Exchange has launched its Sustainable and Green Exchange. It is still early days, but we are the first movers, and we can reap the benefits. Hong Kong financial market, it's open, reliable, and also very efficient. And what we can do is to make up for some of the relative less developed markets in Asia Pacific, and we can be the leader. And we also have the expertise and also the capital markets to be able to advise on taxonomies, which is very important for the development of the sustainable market because the investors, they all want some standards, and the banks, if they want to price the projects efficiently and also in a more standard way, we need the standards, okay? And also, finally, it's very important that if we want others to take green finance and sustainable seriously, we have to be seen to be taking it very seriously ourselves.
Thank you, Peter. You've both talked about the urgency and the need for green transformation to ripple across Asia. So it's not really just one center or one market doing it. We need the whole of Asia to go through this journey. And one of the aims of creating the HKMA and IFC Alliance is actually to promote this green development across Asia. So Alfonso, can you tell us a bit more about IFC work in Asia, and how do you think this Alliance for Green Commercial Banks can help promote green developments across Asia?
Sure. Thank you, Eddie. I think that, as we have here, the role of Asia in reducing global warming is absolutely critical. So we really need Asia to be the leading region to achieve this global objective, I would say. We know that in 2019, 42% of the global CO2 emissions were generated by 5 countries in Asia. And the private sector is already taking very important decisions and very important actions. Let me brief on what IFC is doing and how we ended up with together with HKMA on the creation of the alliance. So IFC started actually quite early in 2010 with the issuance of green bonds. We launched the green bond program at that time, 2010, to help catalyze the market and unlock investments for private sector projects that supported renewable energy, energy efficiency, etc. That was actually, or I can say that now 10 years later or 11 years later, that has really exploded. Now we have issued more than or close to 200 bonds in 20 currencies, including more than $10 billion, which is a significant amount. Especially, I like to highlight the issue of the 20 currencies, because we really believe that issuing these bonds in local currency helps and facilitates the development of capital markets in many of these countries. There were two initiatives, the Amundi Fund and the Regio Fund, that help us to also catalyze a significant volume to the green bond market and to strengthen and deepen this asset class in the region. And last November, we arranged our first blue loan, which is exclusively focused on addressing marine plastic pollution, which is another angle, I would say, super interesting, very important, that is critical for Asia, as we well know. And we believe that after this blue loan to Indorama Ventures, who was the borrower, to increase plastic recycling capacity in Thailand, Indonesia, in Philippines, and in India, and there will come other blue bonds as creating probably a new asset class as we did with green bonds. No? But we also work on green buildings. We have also invested heavily in green buildings, and have a dedicated green building program. What do we do with this green building program? In a way, what we try to do is to improve building efficiency, leading to cost savings and reductions in GHG emissions. No? And we have now important programs in China, Indonesia, Mongolia, Philippines, Vietnam, or India. And then we work, and we are closer now to the alliance, we work very heavily or very intensively in green finance. No? It was mentioned before, no? We work upstream in helping to green the financial sector. I was actually part of the NGFS that was mentioned before by Dr. Ma, which includes, on the greening the financial sector, includes coordinating the sustainable banking network that we launched and we founded together with the China Banking and Insurance Regulatory Commission, and I think that this is the community of financial regulatory agencies and banking associations from emerging markets that form part now of SBN is quite impressive, no? With 40 member countries representing $43 trillion. No? So building on the SBN, we develop a framework for green commercial banks in Asia, which we have been testing in China, and the framework is based on IFC's global experience and local market knowledge in climate finance. And what we learned from this is that there is a need for a platform that will help commercial banks to mainstream green business and develop more focused financial products to unlock the potential that this has in the market. No? And here is, or that's why we came with together with HKMA to the idea of establishing the Alliance for Green Commercial Banks. The Alliance will bring together financial institutions, research bodies, technology providers, to develop green commercial banks and to promote climate investments. It will be a cross-regional and cross-sectorial collaboration to create a platform for commercial banks from emerging markets that aim to become greener banks. The Alliance will also provide commercial banks with the knowledge and tools to develop and scale up green products and services. I believe that this is the type of platforms that we need to create that will facilitate this process and that we really need to push for it precisely today more than ever, no? Thinking on this way of building back better, that as we will know, is the big opportunity that we have after this COVID-19 crisis and the recovery.
Thank you, Alfonso. We have about 10 minutes left for questions from the floor. So for the audience, you can send in your questions in writing, and I will see it in my iPad. Now, let me check the questions. There's one here that is directed at Sun Yu. It talks about greenwashing. There may be people are worried about greenwashing. What's your view about that? You earlier, and Peter also mentioned about the needs for standards and rules. So how do you think about the risk of greenwashing?
Okay, so to be frank, I think it's a real threat, and we must deal with it carefully. Otherwise, it could be a disaster for the reputation of the whole industry. A harmonized green and sustainable finance standard is critical to minimize the so-called greenwashing risk. For the time being, we don't have, there's neither globally uniformed nor legally binding definition of green finance. The uncertainty of the definition of green finance could hinder global investors, the financial institutions and other players to participate in the market. That is why we are expecting, the launch of the Common Ground Taxonomy in Hong Kong. I think the Common Ground Taxonomy developed by the working group, jointly led by China and the EU, could bridge the largest market in the world. And by having a uniform definition of standard, not only provides clarity to stakeholders, but also improves overall confidence of the market. And meanwhile, with the expected the uniform standard and the ESG disclosure requirements, moving from the voluntary to a compulsory basis, there's a chance that the financial institutions could gradually collect and accumulate a substantial of high-quality, continuous, timely data, which is crucial and extremely important and valuable for the bank for the green pricing, sustainable investing, and also the risk management. So in short, I think the unified standard is very important. I think HKMA is doing a good job by releasing the white paper as well to give the guidance to the industry. I think I'm positive on green finance, but I think when we talk about something positive, we must also be careful about the potential risk. Greenwash is something we need to take care of. Thank you.
Thank you, Sun Yu. So it's really about taxonomy disclosure reporting. We need harmonized and consistent standards, not only within the jurisdiction, but in fact globally. And I think this is where Ma Jun and the other regulators are collectively working on. There's a question here directed at Alfonso. It's a question that I want to know as well. How to promote a corporate culture that ESG can be fully integrated in the daily business operations and portfolio. This is a challenge that we at the HKMA is also facing. We want to really weave ESG into every operation, investments, market development, etc. But how do you create this culture that everybody is aware and kind of buy in with it? Alfonso, please.
Yeah, thank you, Eddie. So this is actually one of our main objectives, I would say, and one of the things that we feel more proud of because we really believe that we can make things change by doing that. So for ESG to be fully integrated into daily operations and portfolios, what we think we need to do is first to change the way that we assess and manage climate-related financial risks, making them a critical consideration, financial decision-making and asset valuation. So this is kind of a principle that we should implement or that we should help our clients to. Second is to establish very clear and measurable standards to evaluate environmental, social, and governance qualities at both the asset and portfolio level. This is not easy, as we have discussed. It's not only, if you wish, ESG washing, but is that what we need is to have something that is standard, that is clear, that is measurable, and therefore that any potential investor has the capacity to assess. Third, that we promote transparent and consistent climate disclosure, allowing ESG comparison across assets and recognition of sustainable investments. And here I think that there is one piece of the regulatory issues that we should also bring to this conversation, which is the market discipline. I really believe that the Pillar 3 of Basel II or market discipline needs to play a fundamental role in greening the financial sector. It is not just a question of Pillar 1, it is not just a question of credit risk, it's also a question of market discipline. It's also a question of how we disclose and how we transmit the information that the market requires and that in the society, in a way, both investors and consumers will be able to assess comparing one bank to the others. So a clear incentive system, I think that is very important, that favors collaboration towards this green transformation, but that also creates internally the incentives across players on how to do it. So there is a regulatory piece, there is a market discipline piece, there is a clear incentives piece. And finally, development of an internal green governance system. I think that this is very important, as it systematically introduces key building blocks in ESG management to the workplace and daily business operations. It is very important that the system includes ESG governance strategies, ESG practices, and guidelines for business development. Let me stop here, Eddie.
Thank you, Alfonso. I think we have time for only one more question. And I'll pick a very simple and direct one that's directed at Peter. How does Hsbc make the world a greener place? I think it's not really about the lending practices, but also about your own operations.
Yeah. So HSBC is no stranger to green. If you look at our building in Hong Kong, it was established in 1985. And the whole building is run on, the cooling system is run on seawater. And we're also putting our own house in order. We have pledged to make our operation carbon neutral by 2030, our portfolio carbon neutral by 2050. And we're committed on a science-based strategy with short and medium-term targets. And also by the end of the year, we'll be issuing very clear guidelines in terms of phasing out financing of coal-fired power and also thermal coal mining in EU as well as OECD. We also report our progress towards a net zero in our annual reports. We are encouraging the development of green finance more broadly through our work with clients and their operations. We're also helping to develop the green markets, which is very important for the development of green financing. And we're working also with the Hong Kong Green Alliance and Asia Pacific Loan Market Association to develop new products. And we'll be doing more in the future. At this point in time, I think that this is something that we're committed to.
Thank you, Peter. I think we need to close the session now. And after hearing from our three panelists, I think there are several key takeaways that I get from this session. First is that banks in Asia are already embarking on their green transformation journey. It's really not only about the strategic or lending decisions, but also about creating the right governance structure, like what Sun Yu said, sustainability committee, and to oversee the developments, and also about how the operations can get greener, like Peter just described. The second takeaway is that despite the vast differences in different jurisdictions across Asia, there's actually one thing in common, which is ESG can create business opportunities for banks. It's really about creating new market-based solutions for your clients. It's about getting greener in order that the banks can differentiate themselves from the others. So it's actually an opportunity set that banks in Asia should grab. The third takeaway is Hong Kong's role in pushing forward the green agenda in Asia. As discussed earlier, Hong Kong has already got the ecosystem in promoting green finance, and we hope that this ecosystem can actually ripple across Asia to help others to get greener. And we also discussed one point, which is we need to act collectively. Acting alone is not sufficient. And this is actually why HKMA and IFC collectively launched the Alliance for Green Commercial Banks, which aims to promote green development across Asia, build the capacity, equip the banks with the necessary tools and knowledge. And we do look forward to the further development of this alliance so that we can put the green message and how to do green transformation more effectively across Asia. This roundtable is the first event of the Green Alliance, of the Alliance for Green Commercial Banks. And we do expect that there will be a lot more to come so that the idea of green transformation for banks can effectively ripple across Asia, and Hong Kong can continue to serve as the hub for green finance among commercial banks in Asia. So we are now coming to the end of our discussion. So once again, let me thank Peter, Sun Yu, and Alfonso for your participation at today's roundtable. Thank you very much. We look forward to seeing all of you, the audience, in our next event of the Alliance. Now, let me hand back to our MC. Thank you very much.
Thank you, Eddie. Looking ahead, as part of the Alliance knowledge sharing and capacity building effort, the Alliance will continue to host a series of roundtables as well as training sessions on an array of relevant topics throughout the year. Thank you everyone for joining the first roundtable of the Alliance for Green Commercial Banks today. You have witnessed a significant milestone of the Alliance. This concludes the roundtable today, and we look forward to seeing you again in our next event. Thank you and have a good day.